Welcome to the Compliance Leaders Perspective this morning, kind of kicking off the Global RegTech Summit. Let me give you a little background on myself. It was very interesting looking at that slide with the 11 billion invested in that. I mean, since 2016, my company, which is PE-backed, has been responsible for some of those investments. At one level, I'm an investor in this space, so I've looked at a lot of companies in the RegTech space. I think we've, latest count, I've market mapped up to 200 companies in this space, and believe me, a lot of them are kind of opportunistic FinTech rather than RegTech, designed to meet regulatory needs. But when I actually started the exercise to, started shopping around for a private equity firm to, support the vision I had to build a global RegTech platform, there was a realization, and something we'll touch on with the panel today, that there are a lot of the industry was really faced with tactical responses to regulatory technology rather than a strategic partnership with someone who had a global footprint. Today we have offices in 7 locations worldwide. We're 250 people worldwide, and that came initially from an idea to build a global RegTech platform. And you can almost park that term RegTech, and what we're really talking about is how do you provide that strategic partnership. So rather than putting product in front of a financial institution, how you sit there and discuss a solution, whether that's around template creation, cost and charges, data distribution, data collection and validation. It all sits within a single solution set. So back in 2015, when I started exploring building this platform and talking to various private equity firms to support me, at that stage, the vision was really encapsulated by someone that really inspired me, Edward Osborne Wilson. I mean, he's an esteemed biologist. He's also the world expert in ants. He actually came out with the famous statement that we're drowning in information while starving for wisdom. And this really summed up this space for me in many senses. Now, Wilson predicted a future in which the world would be run by what he called synthesizers, those able to put the right information, collect the right information at the right time, think critically about it, and make important choices wisely based upon the outcome. Now, that really summed up the challenge of regulatory compliance and what regulatory technology tries to help with. In terms of looking at RegTech and RegTech companies, I think sometimes it's easy to say what are the pitfalls. And recently, Deloitte came out with research, and they looked at a kind of four pitfalls of deploying RegTech solutions. The first was that a lot of RegTech firms approach the regulatory challenge from a technology solutions-orientated perspective, rather than a strategic approach, centered around the key regulatory needs, and that actually leads to suboptimal outcomes for customers. As I said, I've market mapped a lot of companies. The RegTech space is saturated. As I said, there's a lot of opportunistic FinTech that's just changed the label on top of the door. It makes it tough for financial institutions to see through the fog. Thirdly, many RegTech firms are in a nascent stage. They typically offer a solution that only solves one piece of what is a gamut of regulatory compliance needs. And many RegTech firms, they lack a deep understanding of a financial institution's business and the complexity of the risk, the regulations, and the compliance challenges they face. And that means it's not just about the software. You have to also deliver a deep knowledge base as well to support the software solutions you provide. The size of the regulatory challenge is truly immense today. It's estimated that by next year there'll be over 300 million pages of regulation in existence just for the financial services industry to grapple with. Were we to freeze a moment in time right now, and actually, it's not going to freeze, it's just going to, inexorably rise, the burden of regulation. But a snapshot today, you facing financial services, you'd look at PRIPS, the second Payment Services Directive, the fifth UCITS Directive, MiFID II, the fourth Anti-Money Laundering Directive, the Capital Requirements Directive, the Capital Requirements Regulation, Euro Market Infrastructure Regulation, the second Market Abuse Directive, Senior Managers Regime. I mean, all of those, what it tells us, we're actually undergoing a systemic shift in terms of compliance and risk and capital and liquidity requirements, governance and supervision. Now, while the first stage of regulatory adoption, the focus has been on providing the right type of data. Increasing the focus today going forward is going to be on the quality and completeness of that data. I think only recently a major sell-side firm was penalised for reporting over 6 million transactions that weren't actually reportable. So what that tells us is an unprecedented reporting requirement placed on financial institutions. Regulators now view information accuracy and data accuracy as integral to making regulations effective. So the pressure has never been more acute. Now this morning we're joined by this esteemed panel. I'm happy to say that the panel of experts that we've gathered, we have Markus Schulz as Global Head of Financial Crime Compliance Controls at Standard Chartered Bank, Sabine Dittrich, Global Head of Regulatory Intelligence at UBS, and Dr. Giles Spungin, who's the Global Head of Regulatory Compliance and Operational Risk Analytics at HSBC. There'll be 4 broad themes that we hope to kind of get through today. The first will be what are the top-of-mind issues for leaders in this space. We'll look at the case for outsourcing regulatory compliance, and then the scope for common responses and common problems, the whole realm of collaboration versus competition. And then finally, we'll end on what next for regulatory technology. Hopefully we'll have time at the end. There's a lot to cover for some questions, but during the course of the debate, it'd be great if we can make it interactive. Please feel free to put up your hand. I'm sure there's someone with a microphone. So on that point, I talked about the size of the challenge we face, and I think it's quite, it's very much a stock question. What tends to keep you awake at night? But let's refine that a little more. In terms of keeping you awake, is it the weight of regulation itself or your ability to respond to that? Sabine.
Yeah, good morning also from my side. I would say it's the quality on how we can respond to regulation. But of course, until you get there, you need to have done a couple of other work, basically. So what we do in my team, we actually review 700 regulations. So we have a radar on which we have 700 items. So you really need to break it down, and you need to prioritize, and then you need to define kind of like the top 40 worldwide or so, in which you put a little bit more effort in terms of analyzation, but also in terms of the response on how to implement it.
Okay, thank you.
Well, I would say nothing keeps me up at night. Maybe due to the fact that we're too busy with working long hours and projects that to meet all of these obligations, and finally when you hit the mattress, there's nothing that keeps you really up at night. But let me actually be a little bit more controversial, because I don't think much has changed, to be perfectly honest. Right? So I think we're talking about this hype of regulation, so someone needs to explain to me what exactly has changed over the last 10, 15 years, because I don't feel any change, right? That pressure has been there 10 years ago, 5 years ago, and today. I've been working at multiple different institutions under enforcement, so I'm not seeing the big shift here. And I think we need to be realistic about that. Now there's more opportunity to do more from a technology point of view, but I'm not quite seeing that tsunami that's been described, because I feel like we've been drowning for a long time.
It's a very bleak picture you're painting there. Just to help and contextualize, so my role is much broader rather than just RegTech. So I look after development and deployment of advanced analytics capability in risk. RegTech angle is one of many. But fundamentally, and that's kind of will help you to contextualize what's keeping me awake. I think clearly there's a huge amount of opportunity to deploy capability which takes additional insights from the data, whether it's kind of the regulatory text or whether it's the data that we as a financial industry generate and maintain for reg compliance purposes. But the angle here is not just about the technology, but how do we utilize and deploy and develop that technology in a measured, risk-managed way. So there's a huge amount of focus on AI and ML and how it can actually help to make our lives easier, more streamlined. So this is kind of better, faster, cheaper type angle. And some of these solutions that do work really well at a point in time, but we need to be forward-looking. So how do we grow that capability and embed it, most importantly, in a way that we can justify 5, 10, 15 years down the road? That's what I spend quite a bit of time on.
Okay, thank you. Mark, I mean, you mentioned you're dealing, well, obviously you don't sleep at night because the amount of regulation you have to cope with, I think was the answer, but you mentioned the kind of tsunami of regulation. It's been there for some time. So I suppose within that, with a lot of regulations overlapping as well, how do you go about prioritizing your response, and how much do you future-proof for upcoming changes in regulation, new regulations coming on board the whole time?
I think what has helped us in a number of different institutions that I work for is not to get stuck only with the letter of the law, but taking a step back is kind of the spirit of it. So what is it you're trying to, or these regulations really trying to achieve? And focus your solution design more on the actual outcome of those regulations, guidance notes, legal environments, depending what aspect you deal with. So I think it's a really important piece that the SMEs spend enough time to understand what's the essence of it, so that you're not saying, I'm just meeting this requirement. So, what is the regulation actually trying to do? Take a step back and saying, okay, I can meet this, or I can do a little more, trying to actually be in the spirit of the regulation and hopefully help me to be more future-proof. Because just chasing regulation line by line, I don't think will get you eventually to the outcome. And I see too many of the solutions trying to be attached too close to individual regulations. They will change, and I don't want to change my solution every time over. So the question is, what capability can I build that allows me to be broader, more future-proof, rather than just being, I'm okay today. Well, that's not good enough, because as we all know, it will change tomorrow anyway.
And does that rely upon building I mean, to what extent do you balance building the solution in-house as opposed to actually going out of house to look for kind of outsourced solutions?
So last time I checked, I work for a bank, not a software company, and I would like to keep it that way. Because there's a lot of people who talk to me about, yeah, the vendors are too expensive. I can do this quicker. I can do this faster. I can do this simpler. And it's most likely all true. It's most likely all true. Which also isn't asked maybe to be cheaper. No. But it's most likely all true. But there's a big difference between building something and maintaining something. And banks, at least those I've worked for, are not good at maintaining. Building is quick. Get some geeks around, build it quickly, 4 or 5 clever guys. They can do most likely as good as a job as the vendor. Faster, cheaper, fine. These folks will move on very quickly. And you're stuck with a legacy that you can't do anything with. And usually, sorry for any coders and developers, documentation is not most likely one of the things that people enjoy most. And then a solution is kind of mediocre to not document it at all, and then you're stuck with it for the next X years. And what happens 2 years later, when the thing starts falling apart or regulation starts changing, you want to make a change, where's the chap who built it? Oh, he left the company. All right, so who's doing it? Don't know. Okay, we need to have a vendor solution. So I think it's much smarter to team up with the vendor. Vendors being more open to actually team up with firms and actually develop something jointly for the industry. And generally, when the tide comes in, all boats rise at the same time. If we can use similar solutions, that will help.
Right, Sabine, I mean, one thing I talked about in my introduction was the sheer number of regulatory technology firms, outside vendors that you can approach today. It does seem to me, kind of standing outside of the financial services industry, the vendor looking in, that with each new regulation, that not criticising individual institutions, but there seems to be a trend where an institution goes back to the market for the solution. So you end up with a whole raft of vendors, actually sometimes around a single regulation. I mean, if you look at MiFID II, it's everything from trade and transaction reporting to best X, right through to product governance. And you can find you've got several vendors in there. So looking through that fog, how do you apply selection criteria to find the right the right vendor that you can future-proof the the regulations you face?
I think before you choose the appropriate vendor, I mean, what you really need to do in-house is you need to start understanding the regulation, but not only like a single regulation, but you need to look at the package. So what we really do is we look into, are there themes across the globe, so in the US, in Europe, are there different regulations which actually could require like a similar technological response or implementation response. So if you look into kind of grouping different regulations and finding the common denominator, you come from a much more kind of strategic position, and that really helps you not having like a jigsaw puzzle also of different vendors.
Right. But do you find that there are vendors there that offer the same kind of strategic approach that you're seeking? Because it's one thing, looking for that strategic response. As I said, there seem to be kind of quite tactical in the kind of deployment and development of RegTech thus far in the market.
Yeah, I think it really depends. So when I look into how we implemented MiFID, we have a huge number of different vendors from where we get market data, for example, just for every asset class, like a different service provider. And that's of course like we would wish, that this is getting harmonized and, we have a single point of entry. We were more lucky on some other regulations, like maybe, let's say, with liquidity risk management, where we try to have a global solution and partner up with a global vendor, basically.
Right, thank you. Giles, I wanted to touch on, where within an institution, where regulatory compliance sits in terms of it. We know it's all very important. We know the regulators are focused on that. But when you look at senior management and they're looking at shareholder return, how they marry the kind of investment you have to do there. I mean, a few years ago, I spoke to one of your counterparts, Stuart Levy, the chief legal officer at HSBC Holdings. Now, clearly at HSBC, they've kind of elevated that importance, practically to board level. Do you collectively feel, and we'll start with you, Giles, that this is getting senior management time and attention? I mean, yes, look, they all know that it's got to be done, but is it a discussion that's taking place at board level, and you have the support to find the optimum solutions there?
Absolutely, yes, and it's so definitely there's a huge amount of focus and support at the top of the house, to your point earlier. But I think to kind of touch on your couple of previous questions, it's not just about how do we manage reg compliance where regulation is a trigger point. It's how do we integrate reg compliance into our end-to-end BAU. So what I mean by that, whether it's the business as the risk owner, doing the right thing to make sure that we're not triggering too many reg non-compliance alerts, simplifying here, or how do we ensure that we're managing the risk of the organization much better? And I think, and again, touching on previous questions, so how do we ensure the successful embeddedness of that technology, of that capability? So, and this is interestingly to the kind of previous point, that there's a huge amount of debate internally in terms of buy versus build. So clearly we have capability to build from scratch, but I think what we find is, I mean, and we have to build sometimes when there is nothing in the market, but where that kind of advanced collaboration with RegTech, FinTech providers come to fruition is where we have like-minded individuals around the table helping with the deployment of that RegTech capability. Why, first of all, you're speaking to the like-minded people. Secondly, internal individuals understand the problems much better, and then they will actually help you to take you on their journey of embeddedness. And more importantly, if that's a success, then clearly there's a huge amount of opportunity of kind of ongoing relationship. So I suppose the point here is the reg compliance piece and kind of identification of how do I comply and which regulation do I need to comply is only the starting point in that journey.
Right. Could I, in terms of, at this current juncture in time, what is the most pressing kind of regulatory requirement you face at an institutional level? We're looking at SFTR, one of the regulations coming. We're looking at, obviously, anti-money laundering, sanction screening. That's kind of forever something that the regulators and government, even government input at that level. So do you prioritize, could you actually kind of set out those priorities in terms of those regulatory drivers for you right now?
So I'll just kick off briefly, just to help. You understand the size of the size of the pie, if you will. So in our institution, we are in around 70-odd countries, China alone 60+ regulators. So that problem of identifying which regulation do I need to prioritize becomes a very involved task. So, and that's why you need to have a better understanding of your kind of business geographical footprint, the regulatory landscape, and effectively kind of triangulate these three. So it's not an easy ask. I'm not going to give you the list of top fives, but just to help you understand the perplexity, and also interestingly, again, talking to the point of RegTech, if we're looking at the kind of global landscape, certain parts of the world are more advanced in terms of RegTech agenda than others, but fundamentally, again, touching on your previous point in terms of how do we ensure success with RegTech engagements. Sometimes RegTech companies need to be more kind of forward-looking and open-minded in terms of the scale of the organizations that they're willing to conduct business with, because we've seen a few examples where companies are really good at doing certain things at a kind of constrained scale. But if, for example, we're engaging in a kind of more global discussions, sometimes we realize that the scale to support those asks from our side is not quite there. So there are multiple pieces to the in the jigsaw.
And that's an important issue within itself, because to what extent do you crave or look for kind of homogeneous or ubiquitous solutions in multiple jurisdictions? Sabine, or Giles, sorry.
Yeah, I would say, I mean, I mentioned before that we have themes, under which we group the regulation. So investor protection just stays like extremely important, whether that's the next review of PRIPS or, the kickstart already of, the review of MiFID II, actually. And a couple of other local initiatives, including here in the UK, on cost disclosure and performance scenarios and performance disclosure. So that's a very big theme. We still have, I would say, legacy. So in terms of derivatives reform, so that's really not yet finalized, even though it was one of the first kind of initiatives under the financial crisis. So a couple of these deliverables are still kicking in. Liquidity risk management, I mentioned it before, and potentially also data protection. Mm-hmm. So it didn't stop with GDPR. We see now even like a Cayman Island data protection law, or like a California data protection law. So it's in general, it's I think a theme that is that we see globally. Discussions that we see in the parliaments around safety of e-commerce or social platforms and how to deal with data here. That will definitely define also discussions around e-privacy and in the upcoming European Commission.
Right, Giles, we were talking about kind of ubiquitous solutions.
Yeah, so I wanted to kind of merge two of your questions a little bit together. It's one of the awareness top of the house and then the prioritization. I think everyone understands now that this is your license to play. So regulatory aspects are your license to play. So if you want to be in that business, you have no choice other than accepting the rules, regulations that you just have to accept and have to adopt. So I think everyone understands that, broadly speaking, and maybe there's a few board members who don't, but I think generally the landscape has changed pretty much. All companies I've been talking to, at least there's a much broader understanding now than there has been ever before. The question is twofold then around that. Is it your license to play, and it's a big investment, only to get the license, or what else can you do with that investment? So that's a bigger question, more broadly speaking. If I spend all of that money on RegTech solutions, on implementation of regulation, what else can I do with this investment? Right? Is it just to get my license, or can I take parts of that, what I build, to leverage and support other processes, marketing, sales, customer insights, whatever you may want to do with that? Because there's a huge amount of data that you collect for regulatory purpose. Question is, where feasible, where legal, where appropriate, should you do something else with that investment to increase your return on investment? So that's the question. Is it, the understanding is there, we need to get a license, but the secondary question for me is, what else can I do with that investment? But then you come to planning and prioritization. And actually, I used another word there, just planning. For me, it's not about prioritization, because you cannot say, yeah, let's spend some money on MiFID today, and I ignore about AML, and it's not happening, right? So it's a question of, what are the key dates and how can I plan the investment that I have and synchronize this? And are there opportunities to maybe, again, data acquisition to look into, all right, I need this for MiFID or for investor protection. That's customer data. Where else do I need the customer data? So having a much broader view on data, because by the end of the day, most of the implementations we do, at least the institution that I've worked with, the majority of the costs are not with vendors. The majority of our costs are in-house. Usually plumbing, connectivity, acquisition of data, cleaning of data, scrutinizing of data, and making the data finally talk to each other to do something with it. So data actually is the majority of our costs, at least those banks that have a legacy systems are around for maybe more than 5+ years. So the challenger banks have it a little easier if you have a single system and can design it right from the beginning. But all of us with legacy systems, going back to the 80s and 90s, if you take data out of that and try to plumb it together, you find so many different formats that I think that's the question. From a prioritization point of view, can you plan it smarter and think about all the different regulations and what are the common denominators to make my life a little easier? It's still hard enough.
Yeah, no, you raise a very important point there in terms of where you choose to invest. Obviously there's something you have to do. And a good example of that, because I asked earlier about senior executive support and board support for this, because let me give you one example. I mean, if you look at the areas of anti-money laundering and sanction screening, now, one could suppose that in correct me if I'm wrong, but in the whole area of AML, there's going to be a lot of support because it can actually cost the institution money if you get that wrong. A lot of money. Sanction screening is just something you've got to do. And one thing that's always perplexed me is how AML and sanction screening, which really have the same kind of underlying principles driving it, often are separate within organizations. And there seems to be a lot less money spent on sanction screening than is spent on anti-money laundering. So to that extent, are there kind of underlying, yes, there's regulation you've got to meet, but there's some regulation, like, substantial shareholding threshold disclosures, position limit, right? There's some where there's a business imperative underlying that investment. So you get that senior support. Is that a point you'd agree with?
Oh, absolutely. But I think people do understand more broadly there are also other things that can trip you up at a later stage. So sanctions, AML, and all of the key ones that you just mentioned, absolutely. But everyone understands there's more. 700 you track. There's more than just those 4, 5, 6, 7. There are others that can trip you up, and we all have seen it. You pay not attention to one regulation for a little while, and it's a small issue. It's a small issue. A small issue. It's a big issue. So you know that these things can blow up anytime. So you need to pay some attention, have a balanced view across all of them.
And I think you wouldn't want to be just a very reactive player in the field. What you really want, and you mention it basically, you want to have a forward-looking view, and you want to seek opportunities actually when you're implementing regulation. So not only like avoiding to be sanctioned at a certain point of time, but really make something clever out of it. But in order to be able to do that, you need to start pretty early on. And that's, for example, why my team is looking like in the first draft, and then we try actually to shape the regulation and try to change it together with industry associations and so on to get to a good outcome. And that's already the first time when we are talking with our executive committee about big pieces of regulation, so that we have really like this forward-looking view.
Well, given that the discussion is going in the direction of what can we do that's smart with the compliance and all the data we collect around that, it seems to me that compliance in and of itself is often be seen as an endpoint within an organisation. There's regulation, there's compliance, there's compliance function within institutions. We have to kind of meet the requirements of that, collect the right data, validate it, make sure we're reporting on the reportable trades, or we could be penalised for that. But from what you're suggesting, if there's the vast investment that takes place, the collection of data around things such as anti-money laundering, for example, is a good touch point. Does that mean that that it's no longer going forward in the future should be an endpoint, but the compliance function should actually be in lockstep with business managers within the organisation as well? I mean, do we need to restructure how compliance is set out within organisations?
I think it's not about the structure; it's about the mindset, right? So you're not doing reg compliance for the sake of reg compliance, and this is my point earlier. So how do we embed this capability into end-to-end risk management framework? right? So, and again, you talked about best execution, conduct, risk management, things like that. So yes, there are specific reg requirements, but if you take a step back and you think about, so what financial industry is there for? It's to provide services. How can we, or how should we provide the services better for the benefit of our customer base? So it's not, we're not doing a better job from the kind of conduct risk management just because regulation asks us to do so. It's about the mindset, how do I structure my business in such a way that I add value to my customer base? And that's the fundamental point, right? And this is my point earlier in terms of how do we embed RegTech capability. It's not an isolated activity that you undertake to tick the box. It has to be embedded by design into end-to-end.
Right.
So I think it comes back to, for me, it comes back down to the fuel of all of this is data. And there's a lot of good motivations to collect what you need anyway, collect tons of data for regulatory purpose. And to give you an example for AML, we've spent lots of time and money on entity resolution, making sure that we can connect parties across multiple systems. The business wants to have one customer view. Well, there you go. It's basically, you can treat both with the same outcome. So if you work together, yes, I think it's looking more broadly, but it's more from an enterprise point of view. What else can I do? And it's not about priorities, first of all, right? You cannot say, I need this for marketing purpose and the regulatory comes later. So obviously you need to make sure that you get that order right, because before you know it, then everyone gets so excited about using that data for other purpose, not for regulatory, that you become second, third, and fourth in priority ranks. And that's, of course, not an option. So everyone needs to understand what the priorities are. But yes, there are opportunities, plentiful opportunities to leverage those solutions, and it comes down to the data underneath. The solution is less so, more the data that feed them.
Yeah. Also, regulatory compliance really doesn't stop, with the implementation date. I mean, we see it in across the industry that you try to be obviously like compliant at the implementation date that's given by you by the regulator. But ultimately, most of the industry players, they have a day too. So you try to improve it actually along the way. So not every solution that you had in the first place was the optimal solution. So this kind of improvement and constant maintenance also, of solutions. I mean, that's very important, and that's how you mentioned now also, that it's easier to have a vendor at times because that's their job to maintain it.
It is and it isn't, because I've seen this way too often. If you go back the last 10 years, like every institution plugged in some sort of, stick with AML, the example used earlier. Every institution had plugged in some sort of AML transaction monitoring solution 10, 12, 13 years ago. Pretty much every institution. Very few kept it up to date. Very few kept on investing. Because I think it's the big challenge that we have to also senior management. You get the dollars for the implementation. You get the dollars to make it meet the date, whatever date you agreed or that's required. But do you get the dollars or pounds or euros to keep it up to date and maintain it? That's, I think, is a much bigger challenge. Yes, it's easier when you maybe with vendors, but the ongoing up-to-date of the systems, that's my bigger worry. I mean, the good thing is it gives jobs for people in compliance because you come in 5 years later then to replace it and remediate, but that's not very clever.
Well, actually, that brings us to the kind of third theme I wanted to look at, which is kind of common approaches to RegTech. And, again, we're kind of focused on this area of AML and sanction screening. If you look at an organisation like SWIFT, of course, they have the KYC registry for onboarding. Are there, if you look at that whole suite kind of gamut of compliant functions that we have to perform, are there areas that lend themselves, in your mind, to the industry collaborating to create utility solutions, whether that's around a SWIFT, whether that's around a regulator? Giles.
Yeah,
I'll jump
plentiful.
in. Yeah, I agree. So there's definitely an opportunity to contrast and compare and collaborate on lessons learned. One of the themes, and I think you touched on this earlier, vendor risk management. So although we are outsourcing all this capability to external parties, to third party, fourth parties, we still own the risk as a financial institution. So how do we ensure that the capability that we have deployed and onboarded is fit for intended purpose? And it's not just about, how do I make it valid 5-10 years down the road, but also how do I think about what metrics I need to design at the outset to have early warning indicators if something's not working. So I personally, I think there's a huge amount of collaborative effort that can be done on that topic. Also in terms of formulating a view in terms of what we want, in terms of capability. So fundamentally, interestingly, one of the challenging kind of stick points at the outset of the vendor discussions are what are our financial industry firms' business objectives. So interestingly, so the kind of the initial trigger point is regulation, but regulation is the tip of the iceberg. So we have to be very cognizant of the processes and procedures that we actually have to support that reg compliance, and it's a very, very complex topic. So to the point earlier, clearly there's a quite a important data point, but also there is the kind of process embeddedness point, and also is, how do we ensure that we grow all this capability in a measured way? How do we monitor the performance? How do we replace this if need be? What are the metrics that will need to be triggered for us to make the decision? So there's a huge amount of complexity there. And if we can collaborate, just back to your question, if we can collaborate and identify some of those pain points, that will be quite valuable.
There's a couple of aspects around utilities or collaboration. I think it's more utilities. There's two dimensions for me. One is make it cheaper, because if we all do it individually, or is it cheaper to outsource or give it to partners? But then there's a bigger question here. There's a much bigger question for me, and that is it technical compliance that you want to deliver cheaply, or is there really truly an interest to meet the spirit of the regulation? I'll give you an example back with financial crime. Are you just meeting the AML regulations, or are you truly there to fight financial crime? Because there's a couple of things, right? It doesn't matter which aspect of the regulatory landscape you look at. If it's trading, if it's anti-money laundering regulations, if it's any of those, each of us, be it UBS, HSBC, Standard Chartered, or any other institution in the room, we only see a snapshot of the customer. It's very few times that a customer does 100% with business activities with one institution, especially with the larger ones. And by the way, money launderers in particular don't have an interest to have all eggs in one basket. They usually spread it, and normal practice. So the question for utilities is one aspect: cheaper, faster, not a competitive advantage, let's do it together? Or is it even a possibility, an enablement to go a step broader and further, saying, is that maybe unlocking capabilities that none of us has individually to truly protect the market, to truly protect the customer, and to maybe fight financial crime and many other regulatory aspects? Because by the end of the day, it's a question we have to ask ourselves as an industry. Is it here to be technical compliant? And that's also not just for the industry, also for regulators. Or is it actually to really, truly protect customers, markets, and society?
Yeah, well, I think one of the kind of interesting issues that arises out of that strikes me is, we were talking just before the utilities about the business imperatives underlying where we choose to invest. Those are kind of competing bedfellows in many ways. Where we use the data to kind of re-engineer it to actually find that business benefit, but also what parts of that regulatory cycle do we put in the kind of utility approach. We've only got a few minutes left. I do have other questions here, so. But let me open it up to the audience to see if there's anyone here that wants to ask a question about our panel. At the back.
Hi everyone, I'm Ramonda from Monimos, which is a RegTech company. Going to you, Markus, based on the tsunami of regulation, I fully agree with you. It's always been there. It will continue to be there, and nothing has actually changed. What has changed are the regulators are actually beginning to regulate. They're beginning to post out guidelines. They are more clear in what they want, and they are hiring also the right people in the marketplace that understand the complexity and connectivity of how it all works. So I think in terms of actually why do you need the RegTechs? In fact, if the sector, the financial institution, hired the right people in the first place, in the back office, whether that be in the regulatory sections or compliance or legal, you probably would not have seen the birth of RegTech today. How would you like to respond to that?
Actually, it's relatively easy and straightforward, right? Because I haven't seen any birth of any RegTech recently, because that's around for 20 years. And I think we also need to stop that notion that RegTech is new. So last time I checked, I've implemented RegTech solutions 15, 18 years ago. So that's not new. What's new is that we've always used technologies to support our regulatory means, right? We have not been sitting there and printing paper 15 years ago, and all of a sudden last year RegTech was born, and now we do it all electronically. I think we need to get a bit of hype versus reality here back into perspective, and that is that the solutions have been out there. There's more solutions now. More people have actually seen there's money to be made in this market, and that's why you have hundreds more flocking in. That's why you see the investments rising through the sky. But it's not new, right? There's many vendors out there for 15, 18, 20 years and longer.
I do agree with you, but if you look today at some of the solutions are actually solving real problems. And a lot of the solutions...
Last time I checked, the transaction monitoring system I implemented 15 years ago actually solved some real problems for me.
I'm glad, but I think you need to look a little bit beyond that.
Let me add some balance into this discussion, if I may.
Look, we're here for the morning entertainment, right? We're here to wake up that crowd.
I think, no, the problems are still there. I think and again, I'm taking a much broader view. What has changed, and I start from kind of relatively simple observation all the way to kind of more technical ones. First of all, financial institutions realized that we're data companies relatively recently. So as an example, the creation of a CDO as a structure is a relatively new development. So that's number one. So we're more cognizant in terms of the fact that we actually own the data and we're expected to manage the data and do something about it.
And there's plenty of value in the data.
Absolutely, spot on. Which takes me to the second point. So there's a recent rise in technological advancements, whether it's cloud computing, whether it's AI, ML. Again, AI, ML has been around since 1960s.
That's not quite new.
But we have seen democratization or accessibility of that technology due to developments in CPUs, GPUs, TPUs, etc.
The price came down. The availability and the possibilities are more now.
So all these things in together have given rise to this FinTech, RegTech, or tech activity because it became more accessible, and also it became easier and cheaper to take products to the market. And that's essentially triggered, in addition to kind of crowdsourcing and kind of open source technologies that we've seen permutate at an aggressive rate. That's what, in my view, humble view, triggered the development of RegTech.
Which is welcome, right? So don't get me wrong, it's just welcome that we have more competition now than we had before, and it's better to see 20 vendors out there than 2 vendors. There's no doubt about that. And it's good to have some healthy competition. But I think we also need to get back into a kind of a better perspective about hype versus reality, because where we are not helping each other at the moment, between RegTech and industry, where we're not helping each other is creating complete misperception and misunderstanding with C-level staff in particular, saying this is the solution, you plug it in, problem solved. Well, I wish it would be. And I think that's where RegTech and the industry can work much better together.
Sabine, I'll leave the last word to you on this.
Yeah, I think what has changed since the financial crisis is that regulators have really also discovered the use of data in order to achieve financial stability. Of course, there had been regulations before 2008, but what came after that really forced the industry to deal more wisely with the data and in a more coordinated and strategic way.
Okay, well, we've unfortunately run out of time. We didn't even get onto the subject of the next generation of RegTech, with the here and now with AI. I know that's something that Markus, you deploy. I think company Silent 8 in Singapore.
We do.
Please, I'm sure we've got to talk to our panelists on some of their thoughts on that. Apologies for not getting to that point, but it's a very broad area, as you can see. So I'd like to thank Sabine, Markus and Giles for their time this morning. What was a very lively debate. Thank you very much.